Hello and good morning. You tune into Buy Now Sell Now. I'm Ankita Saxena and with me is Kavita Thaplayal. In the next 1 hour, we'll get all your stock-specific questions answered by our experts. The number is flashing on top of your screen, so quickly write into us and we'll get them answered by our fundamental guest and our research analyst and the technical guest as well. But before we get going with the show, of course, let's take stock of how the market is shaping up at this point. Well, we're managing to recover from the lowest point of the day, 50 odd points uptick from the day's lows, but nonetheless, we are on the back foot today. We are trading with cuts of almost 0.2% as far as Nifty is concerned. We are below the 23,900 levels now. Nifty Bank also, is following suit right now. Not much happening, very flat moves coming in, though we have managed to recover 100 points from the day's lows on Nifty Bank as well. Now, remember, the banking pack is in focus today. A lot of management rejigs that are happening, especially in the private banking space, as far as the senior management is concerned. So, Axis Bank, Bandhan Bank, HDFC, RBL, all of them are in focus on the back of the management reshuffle that's ongoing. But besides that, let's take a look at the broader end of the market and how that is shaping up. Let's pull up the charts for mid-cap index. Mid-cap right now is absolutely flat, albeit green, 0.09% of an uptick coming in. Small caps also is the outperformer in the market today, with gains of more than 0.5%. So small caps is the one that is shining in the trading session today. But largely, as far as the large caps are concerned, or the frontline index is concerned right now, we are seeing a decline coming in as of now. But let's go across to my colleague Sajid, who's standing by with a snapshot of the F&O universe. Sajid, take us through what does the F&O space look like as of now?
Thanks, Ankita, for that. The Nifty is below the 23,900 mark, and it's down only 1/4 of a percent at this point in time. But there is a strong open rollover which is happening, and you can see that with the kind of percentage roll gain in the open interest for the July series, that 12% jump in open interest. So active rollover underway at this point in time. Nifty Bank is absolutely flat. That's also seeing some nearly 7% jump in rollovers which have, to the July series. Look at the constituents of the bank, and there's a short build-up happening. The private sector banks, which includes HDFC, ICICI, Axis, public sector banks like SBI, PNB, and BOI, Bank of India, is also seeing some short build-up happening there, except for long build-ups in IndusInd, BOB, and AU Small Finance, and maybe Federal Bank. We've seen the entire basket adding short positions, and a lot of that is because of the rollovers which are happening to the next series at this point. But look at what's happening in call and put writing. You're seeing aggressive call writers at 24,000 and 23,900 at this point in time. There is some build-up of put open interest positions which is coming at 23,900. So hopefully we'll see the Nifty bounce about 23,900. If you look at the distribution chart, it will give you an indication that there's a strong 23,900 put positions which is getting built there. So there might be a push up for the index towards the end to the second half of the day there. But in the gainers, you have some Man Capital, where the stock down up to nearly 3%. Maruti is up 3% today, and BDL is up nearly 2.8% in today's trade. In the losers pack, you have Eicher down on the back of the Delhi EV policy. Nalco is down nearly 4%, and KPIT is seeing a long unwind and it's down 3.4%. In open interest gainers, again, you're seeing huge jump in open interest, and primarily because of the rollovers which are happening for individual stocks, where the rollovers have been less to begin with. So today is the last day, so that's a lot of rollover which is happening there. We include Nippon Life, Varun Beverages, and Max, all seeing some shorts getting built in the July series. Mazagon Dock is seeing a short covering, Cochin is seeing a short covering, and UPL is seeing a long unwind into today's trade. Most active today, Maruti, no guesses for that. 14,000 July call, 170 rupees jump in premium to 355. So premium almost doubling in today's trade. Maruti for the July series there, and open interest is up nearly 35,000 contracts to 2 lakh out, and the stock hovering just below the 13,900 mark at this point in time. The other one is Eicher 7,000 July put, stock holding the 7,000 level, down 328 in today's trade, 74,000 contracts getting added, and again there the premium jump is 80.75 for the July series. So a significant volatility seen in auto stocks with respect to options that we are seeing today. But overall, the market is poised for a directional move in the second half when the rollover picks up. and then it's will try to coincide with the expiry towards the end of the trade.
Sajid, thank you so much for all that snapshot from the FNO universe. But then let's move on and let's get connected with our guest on the show today, Nirav Vora, and Ajit Nayak, our guest, will be answering your stock-specific question. Hi, morning, gentlemen. Welcome to the show, both of you. And Ajit, before we begin, let's just quickly take a tech check from you of the market, Nifty, Bank Nifty, and also the broader indices today.
Yeah, if we look at the Nifty, it started correcting from 24,200 level. There was a huge amount of open interest built up from last couple of sessions. And from there, we have seen a good amount of correction. So now 23,800 would act as a predominant demand area where we saw on 24th June. From there, the buying has emerged and has gone up to 24,200. So for me, as of now, 23,780 would act as a good support zone. So unless and until we do not break below that, I think there is possibility that market could bounce, but the bounce would be limited to 24,200 as of now. So until and unless we don't give a weekly closing about 24,200, I think a market could consolidate it in a narrow range, and then eventually later half of the July we can see a breakout in the either side. But on the other hand, if we break 23,780 level on a closing basis or tomorrow, because today is the expiry, so today's close we do not consider that important. So if tomorrow we close and any from like 23,780, then we can see a deeper correction. So as of now, we are at a very crucial juncture, very important demand zone. But if we compare Nifty and Bank Nifty, Bank Nifty seems to be little outperformer. The correction is in the same process what we have seen in Nifty. So 57,400 is a very important zone for Bank Nifty. We shouldn't go and close below that level. If not, then another rally on the upside till 58,800 to 60,000 is possible in case of Bank Nifty.
All right, let's move on then to live caller who's now joining us. This is Mr. Reddy who's calling in from Bengaluru. Hi, good morning, Mr. Reddy. Thank you so much for calling us today, and tell us what's your question.
Yeah, thanks for the opportunity. Actually, I have bought two stocks, one Banco India and HPL Engine, both.
Okay. And what's your question, sir?
Banco India, I bought on 667.14, and HPL Engine, I have bought on 815.67, both got 41 shares. So my take is like, can I hold or can I want to invest for long term, like 2 to 3 years. Can I hold or can I sell and look for another counter?
Okay, so you have Banco Products and HPL Electric and Power. Let me come to you, Nirav, for this one. If you have coverage on these two counters, he wants to hold it for the longer period time horizon. That's 2 to 3 years is what he's saying. Do you think it's a good hold, or should he probably book his profits and park the money elsewhere?
First of all, good morning, everyone. Talking about Banco Products and HBL Engineering, we don't have in-house coverage on both the stocks, but very honestly, if you look at Banco Products, if you look at the financials, they are looking quite attractive. In fact, from the recent lows, the stock has smartly moved up above 650 levels. If you look at the Q4 numbers also, the operating profit was pretty strong, and the sales were also broadly above the expectations. So overall, if you look at the auto ancillary pack, rather than having auto, we are quite positive on the auto components and auto ancillary as a sector from a 3 to 6 month kind of a time frame. Also from a 1 year perspective, obviously we are positive on automobiles, but we feel that the replacement demand should pick up because of the monsoon as well, and auto ancillary as a pack should do very well. We are expecting good set of numbers as far as Q1 is concerned. So I would definitely suggest the viewer to hold on to Banco Products from a 1 year perspective because of financials are pretty strong. Now talking about HBL Engineering, again, if you look at this particular company, the financials are pretty robust. Return ratios are quite strong. The stock has definitely done very well in the recent past, though we have seen some consolidation post Q4 numbers. But having said that, overall, industrial products as a theme is quite attractive because we have pseudo sectors like AI and data centers, which directly or indirectly, help all these sectors and all these companies in acquiring a lot of orders. So definitely, from a 1 year perspective, you can hold on both the stocks.
All right, that's a take coming in, a fundamental take on both these counters from Neerav. But then let's move on and let's get connected with our WhatsApp viewers. This is the first question coming in from Coimbatore, Anju. And okay, so Anju wants to know about REC. The entry price is 360, and she wants to know if she can book partial profits and maybe deploy the funds somewhere else. And she would also like to know at what levels she can partially book the profit. So let's take a technical as well as a fundamental take. Ajit, I'll start with you. Would you recommend a profit book strategy, or you would just recommend her to hold on for some more time and maybe then decide on the profit booking strategy?
I would recommend to trail her stop loss. The trailing stop loss would be around 355. Why? Because the stock is looking good on the longer term charts, like weekly and monthly. It has consolidated, forming a nice base W kind of a pattern. And now I think the stock could probably cross 390 level, which was the earlier resistance. And once it crosses that, then the stock would continue, will continue its upward trend, and it can go further. And the upside potential target would be around the 450 odd level. That is the one reason, because if she can hold for a longer term perspective, 350 to 55 should be her trailing stop loss. If that gets negated, then she could probably book a profit, lock in a profit, and look for some other stocks. But as of now, charts are looking good on a weekly and monthly time frame.
Right, so a trailing stop loss 355 is the level given by Ajit. Neerav, what strategy would you recommend?
Definitely hold on to REC. In fact, REC would get merged with PFC. So that is the recent news which we have got, that the swap ratio is also out. So for every 100 shares of REC, you will get 88 shares of PFC. So if you calculate the numbers in it is for REC, because if you buy REC at this point in time, you will get an arbitrage opportunity of approximately 4.5 to 5%. So it is definitely advisable to hold on to REC. In fact, you can add REC if you want, because eventually REC shares will get converted into PFC, and overall the entire entity, the merged entity, will be a good 11 lakh crore NBFC power NBFC. So definitely you can hold on to the stock. I assume that post the merger news and the swap ratio news, we can see some short to medium term momentum as well in this particular stock. So I think we can see 385 to 400 levels over next 1 to 2 months kind of a time frame. Obviously, the duration is still not known when exactly the merger will happen. Usually, post the swap ratio is announced, it takes around 6 to 8 months for all the formalities, and then usually REC will get merged into PFC. So definitely hold on to REC.
All right, REC hold call coming in there. Let's move on to the next question then. Satya Prakash writing in from Bengaluru. He says he has IFCI. The entry price is 63 rupees. Would like to know if it's a hold on IFCI. He's entered, with the NSE IPO in focus. Technical targets is what he wants. Coming to you then, Ajit, IFCI, he's bought it at 63 rupees. He's sitting at a profit. Do you see further upside? I'm assuming it's for the shorter period of time, because he wants a technical analysis and targets for this.
In case of IFCI, I feel that he should book some of his profit, and the rest part he should trail to 69. Because if you look at weekly time frame, there is a good evening star kind of a pattern which is happening. In short, it is a bearish indication. Means there could be possibly more correction in this stock. So purely technically, I think he must lock in some profit, and remaining part could trail to 69 rupees.
Okay, so that's the take on IFCI. But then it's time for a short break. Post that, we
Welcome back. You tune in to Buy Now, Sell Now. It's a show where we get all your stock-specific questions answered. The number is still flashing on your screens. Please do write in to us and we'll get them answered by experts. And right now, we have a WhatsApp query coming in from Imtiaz from Kolkata. He says he wants to know about three stocks. First is CDSL. The entry price is 2,835. The second is Trent. The entry price 1,200, and TCS, the entry price is 3,900. He wants to know the short-term target. Should he average or sell? Okay, Ajit, I'll come to you. First, let's pick TCS that's flashing on the screen. He's sitting at a loss right now. And, IT is somehow a pack where, there is a lot of caution there. But in the near term, since he wants to know the targets, and in the near-term target, do you see him recovering his price, or should he now, book his losses and perhaps, enter some other counter?
TCS being a very good company and a large cap, for the long term, I think the stock will definitely review itself and will eventually rebound. But from a shorter term perspective, there is no signal of any reversal of bullish reversal on any time frame. So for short term, yes, because there are a lot of mid caps and small caps which are performing. So to take that advantage, he may book some of the losses and shift to good, relatively performing stock. But from a longer term perspective, I think IT sector is now in a area where there is downside is limited and upside are there is more potential to go upside. So from a shorter term perspective, he may shift to another stock. From a longer term perspective, he may stick to TCS.
All right, long-term hold, a shorter time frame, it's a sell. But let me come to the next counter, Trent. The entry price is 1,200 rupees. He wants to know the short-term targets. He's sitting at a profit on Trent at least. Do you see more upside, say, in the next 6 months, Ajit, or it's time to book his profits?
Trend on a daily time frame, it has broken out from inverse head and shoulder pattern. That is a bullish price pattern. So I would recommend to hold, and the support zone is around 315. So unless and until the stock do not go and trade below that level, there is high probability that the stock could test 3,800 to 4,000 level, where the overhead supplies are placed. So till it doesn't go below 3,015, he can hold.
Right, so that's the view on Trend. And the final stock is CDSL. The entry price is 2,835. Ajit, what's your view on CDSL? Here he's sitting at a profit. Do you suggest he should now cut his losses in the next 6 months, or do you see a price recovery there?
CDSL is in a consolidation mode. Here also there is no such bullish reversal or any bullish pattern which is forming on any of the time frames. So he may cut his losses. If you want to add, the right price would be technically breakout is above 1450. So if the stock sustain above that level, then there is potential upside for the stock. Otherwise, the stock is still in a range bound. The support is placed around 1,200 and resistance is placed around 1,400. Stock may consolidate in this range only.
Okay, so that's a take on all the three counters. But let's move on. We have a live viewer on the phone line with us, Ram from Hyderabad. Hi, good morning, Ram. Ram, can you hear me?
Yeah, hi.
Hi, good morning. You can ask your question.
Yeah, so I have 14 polymedical shares at 2227. So should I hold or exit? Can I suggest?
Quite a high buy price. For how long would you want to stay put now in this?
Maybe 1 year or 1.5 years.
You still want to give 1 year's time. Okay. All right. We'll check with our experts. Nirav, do you have it in your coverage?
So we don't have this particular stock in the coverage, but having said that, definitely I would suggest the viewer to hold on to this particular stock, because the reason is we have seen some consolidation in the company as far as the financials are concerned over the last 3 to 4 quarters. But having said that, we feel that most of the negatives are now priced in. If you look at the fundamentals, they are pretty strong. The company is a 17,000 odd crore market cap. Valuations were slightly on the higher side. That's where we have seen good amount of correction happening over the last couple of years. But having said that, the return ratios are pretty strong, and we feel that now on, all these stocks, that is medical related stocks, should do well probably over the next couple of quarters. So definitely hold on to the stock. Maybe Q1 or the next quarter, that is Q2, we might see some kind of a turnaround as far as the numbers are concerned, which were absolutely flat. So definitely hold on to the stock.
All right, Ajit, a quick tech check.
Yeah, my also hold on to the stock. The stock is doing quite well on the technical front as well. It has attempting to break that falling wedge, and which is a good indication. And for the potential upside of 2,800 to 3,000, eventually the stock will bounce because the stock on a weekly time frame has shown a potential bullish reversal. So yes, you can hold on to the stock. The only line of concern is 1,500 level. If it does not fall back below that 1,500 level, the falling wedge pattern would not got invalidated. So yes, you can hold on to the stock.
Right, that's the view coming in on Polymedicure. But let's move on to the next question on WhatsApp. Shrikant is writing in from Hyderabad. He says, suggest an entry price for SBI and Medi-Asset Healthcare for the long term. He wants to know the entry price. Okay, Ajit, I'll come to you. Firstly, what should be the right entry price for SBI, Ajit?
Entry price for the SBI is around 960 to 950 level. That's a good demand zone on the weekly time frame. So if by any chance it correct to that price, then for the longer term, it's a good entry price.
All right, and the next stock is Medi-Assist Healthcare. What would be the entry price for that?
No, we do coverage on that particular stock.
All right, so that's the view coming in on SBI. But there's no coverage on Medi-Assist Healthcare. Cool. So we'll move on to the next question. This is KR Balan, who's writing in from Mumbai. He wants recommendation for the next 1 year on Vodafone, Suzlon, Vedanta, Cochin Shipyard, and Infosys. Those are quite a few stocks there. 1 year recommendation. Okay, first let me take two stocks with Ajit first. Ajit, Vodafone and Suzlon, what would be your view? Do you see in the next 1 year, what would be your view on the technical charts for Vodafone?
Vodafone on a long time frame, it is consolidating. So it has to break 19 level. So 19 is an important zone for us. 19 to 18.50 is an important zone for us. I think looking at the structure, there is probability is high to break that 19 level. So if the customer want to add, just can add and or look for a breakout above 19 level.
Right. And what about Suzlon, Ajit?
Suzlon also seems to be quite okay on the chart. On a monthly time frame, it is now showing a higher top and higher bottom kind of a formation. So yes, with a strict support zone of 50, viewer can just hold on to the stock.
Okay, let's move on. And we have a live viewer on the phone line. This is Nikhil. Nikhil, hi, good morning.
Good morning.
Yeah,
This is
your stock is?
regarding market farmer, which is I bought a shares of 2,260 for 254. So I just wanted to know what is the hold down period, or do I need to book some profits?
All right, Ajit, a quick tech check.
On Marks and Pharma Limited, right? Yeah, Marks and Pharma is now near to the resistance of 280. I think it's a quite good time to book onto the profits, lock into the profits, because there is possibility that it could correct and then rebounds and break that level. So quick profit would be a good strategy at this level.
All right, on that note, Ajit.
Welcome back. You're watching Buy Now, Sell Now, and we're answering your stock-specific questions. We are now joined by Forum Shera, our expert, and Nirav Vora is still with us. We'll be answering your stock-specific question. Forum, hi. Welcome to the show. And we're also joined by our live viewer, Mr. Raghuraman from Chennai. Hi, good morning, sir.
Good morning.
You can ask your question.
Yeah, actually, my query is that I'm holding 100 shares of Stacksoft. I've been purchasing the shares holding it for the last 4 years, buying in small quantities. And suddenly I see there's a huge surge in the stock, because there are a lot of bug deals happening. But over and above that, is there anything fundamentally good with the stock to hold on?
All right, let's get you a take on that. Nirav, do you have this in your coverage?
Very honestly, we don't cover this particular stock, so
Okay.
unfortunately, I won't be
No
able to answer.
problem. I'll ask Forum to guide Mr. Raghuraman. Forum.
Hi, good morning, and thank you for having me on the show. Well, yes, as he's rightly made a mention that today the stock price has seen a very good momentum. In fact, rather this we would say since yesterday today, and at this point, I think he can continue to hold on to it because the stock price is seeing a good volume. So a lot of buying is coming in, and the sentiment seems to be a little more on the bullish side. In case he wants to consider reducing, he can look at 220 levels to reduce, and by at least 50% profit booking should be considered. While maintaining a trading stop loss will be advisable below the levels of around 188.
All right, let's move on then to the next question. KR Balan is writing in from Mumbai. He wants to know about what, he's already asked his question. Let's go across to Anand Ram, who's writing in from Chennai. He says he has Vikram Solar. The entry price is 185. He says, is there a good entry price? Is this a good entry price or should he wait? Vikram Solar, he's sitting... he's already entered, he's bought the share at 185. He wants to know what should be the strategy. He's sitting at a loss. Forum, I'll come to you. So, I mean, his question is not very clear, but assuming that he wants to know the targets and if he could average in or buy more into it, would this be the right price and what should be the strategy for the next 6 months?
Well, if you look at the stock price when it got listed last year in August, since then the stock price has been quite under pressure and has been one of the underperformers also. Now, assuming his purchase price to be closer to around 88 to even 190 levels, I would suggest just hold on to your existing quantity. Do not look at adding in more because the trend is not very clear yet. So according to me, just maintain a strict stop loss below the levels of around 173. And he would consider, I would rather suggest him to consider switching from the stock once the stock price reaches back to his cost price because it's not given him much gains in lately. So I would suggest to switch from the stock at his cost price. At this point, he can just maintain a stop loss and hold on to it.
Recommended to maintain the stop loss and hold on to it. Let's move on. Anupama from Bangalore wants to know about NBCC and the buy price is 121. Time horizon is almost 1 year. Nirav, I'll come to you. Any outlook?
Yeah, definitely NBCC. See, I mean, there has been a lot of buying which has been noticed in this particular counter by some of the mutual funds. Overall, if you look at this particular stock, there has been a significant, order book which is going on, increasing quarter on quarter. So we feel that this can be, a good potential, kind of a multi-bagger over a 3 to 5 year kind of a time frame because it gets a lot of orders from the government. The valuations are also pretty reasonable. The return ratios are good. Last 2 to 3 quarters, though, the numbers were okayish, but the recent quarter Q4 was pretty much better and ahead of the expectation. And we feel that Q1 and eventually Q2 should be sequentially better than Q4. So from that perspective, we feel that over a short to medium term perspective, one can look at around 115 to 120 odd levels on the stock price. And from a 1 year perspective, probably we can look at a good 25 to 30% kind of an upside. So definitely hold on to the stock.
All right, let's move on then to the next counter and a live caller who's now joining us. Zinat Kausar is joining us from Ranchi on the phone line. Hi, good morning, Zinat, and thank you so much for joining us today.
Yeah, very good morning to all of you. My question is regarding Castrol India, which entry price was 187 and my quantity is 285. So please let me know its future prospect and if I need to switch, which other counter I can look for.
And for how long are you willing to hold Castrol, Zinat?
Around 1 year.
Okay. Then in that case, Nirav, I'll come to you for Castrol because if I look at Castrol's chart, it's been, consolidating, and in fact, in the last 6 months, it's been in a very tight range, if you will. Do you see any reversal coming in for Castrol? I'll come to Forum also for a tech check, but Nirav, on the fundamentals, what do you see for Castrol?
Yes, definitely. If you look at the stock, it has been consolidating for almost, I would say, a year now. Primarily because if you look at the quarter on quarter numbers, they have been pretty, flattish. There has been no incremental EBITDA or EBITDA margin which we have seen over the last 3 to 4 quarters, the net profit has also been broadly in the same range. That's primarily because of the competition and maybe a slight shift towards EV, which has been a structural shift in the overall automobile segment. But having said that, if you look at Castrol, it has a very good dividend yield of approximately 5%. So from that standpoint, and also from the valuation standpoint, it has come to those levels which are pretty reasonable. And you can definitely hold on from this particular level. Technically, probably you can take a call, but fundamentally, definitely you can hold on to the stock. You can sell the stock on any rise, anywhere in the range of 10 to 15%. If it goes on the to the north from the current market price, you can definitely knock it off. So at this point in time, I would definitely recommend to hold on to the stock.
Right, a hold call coming in for the next 1 year and a sell on any 10 to 15% uptick on Castrol. But Forum, I'll come to you for a tech check also. For the next 10 years, like we were talking about how it's been in a consolidative phase, how it's very range bound for the last 6 months. Do you see that that Castrol, some sort of a reversal on the charts for Castrol?
Well, as the stock price this year has been consolidating, in fact, in a very narrow range, and I would be very much in line of what Nirav has been saying, that yes, you can hold on at this point. And in fact, it's a valuation-wise, it seems to be quite reasonable at current levels. However, looking an up move towards the levels of 200 to 203 is where the stock price technically would also be facing resistance, and thus you can consider, or she can consider booking some profits there. So I would recommend watch out for those levels of around 200 to 203 to consider booking profits.
Okay, let's move on. And the other question is coming in from Sunil from Bangalore, and the stock name is Sun Pharma. Buy price is 812, and it's a long-term horizon and opinion in terms of targets he's looking for in the long term. Nirav, what target would you recommend? 812, a fantastic buy price, and congratulations to Sunil. He's in good profits over there. A part profit strategy maybe, Nirav?
Yeah, absolutely. Sun Pharma, definitely it's a buy. In fact, it's one of the top picks from the overall pharma space. Now, talking about the pharma space, we have been liking the space since last 3 to 4 months. We have seen a lot of interest in this particular space, right from the FIIs to DIIs, and also a lot of retail participation has been seen. Now, talking about Sun Pharma, definitely it is growing well in a lot of verticals like the specialized medicines in the US, the domestic markets also it is doing very well. Overall, if you look at the recent past, the numbers were slightly below the expectations. But having said that, we feel that most of the headwinds are now behind, and also in the US there is a lot of shortage as far as the medicines are concerned. So from that standpoint, also we feel that the upcoming quarters, Q1, Q2, eventually Q3, should be definitely good for most of the pharma companies and for Sun Pharma as well. So I think this is a very good time to enter into the stock. Maybe because of the volatility in the space and overall market, we can see some 5 to 7% kind of a downside as well. But that would be again a good opportunity to average out. So from a 1 year standpoint, the target price for Sun Pharma would be 2011. So definitely add this particular stock in depth.
All right, let's move on to the next question that's coming in on WhatsApp. This is a question that's coming in from Deepak Dave from Gandhinagar. He says the stock that he owns is Motherson Sumi Wiring. The entry price is 45 rupees and it's a long-term hold. Should he average in or exit? He's sitting at a loss right now, even though the stock has been consolidating for a while. Nirav, I want to ask you from the long-term perspective, would this be a hold for the next 1 year, since he's mentioned long term?
Absolutely. In fact, we had recommended this stock some time back to our investors from a short-term perspective. Recently, we have seen huge amount of volume happening in the stock price, and the stock has also moved up from 35 odd levels to somewhere around 40 odd levels. But we feel that post a slight consolidation, we feel that this should eventually move towards 50 odd levels, because overall, as I mentioned earlier also in the show, that we are quite positive on the auto ancillary as a space. So we would be preferring auto ancillary names rather than auto names from a 2 to 3 quarter kind of a time frame. So definitely Motherson Sumi Wiring, one can definitely look at it at this point in time also, and any dip in the stock price one can definitely add for targets of around 50 to 55 on the upside.
Okay, let's move on. Next question is coming in from Coimbatore from Mr. Bharatwaj, and the is the stock in concern 393 is the buy price, and time horizon is 2 to 3 years. In fact, he wants to buy more at the current rate as well. So let's give a buy price first to him. For him, what would you recommend? Should he just hold on for a bit?
Well, the stock price has been doing quite well. And in fact, from a long-term horizon, also these levels are good enough to buy. The stock price is trying to take support at multiple moving averages between 50, 100 and 200. So according to me, these current levels are also good enough to consider buying it for long term. In fact, technically, once the stock price takes off 490 levels, we can expect some good momentum and even a buy at such levels. So this is more like an accumulation zone.
Stock is in the accumulation zone, definitely. He's already in profits. But Nirav, what would you recommend?
Yes, from a 1 year standpoint, our target price is 605. Talking about delivery, if you look at Q4 also, it came out with a pretty strong quarter, wherein the revenue was up to the north of 30% on a YOY basis. EBITDA margins also expanded by almost 200 bips, which came in at around 4.5%. Overall, if you see, the company has done a lot of capex in last 1 year, and it has turned cash flow positive. So net, all the fundamentals are in place, and we feel that it's a good time to enter at the current market price, and keep accumulating dips. From a 1 year standpoint, as I mentioned, 605 is the target which we are looking at.
All right, and let's move on to the final query of the day. Mohit from Ludhiana is writing in. He says he has bought an MDC. The entry price is 19 rupees, and he wants to know if he should sell it or keep it as a portfolio stock for the next 5 years. Okay, so he's sitting at a profit. He's willing to hold it for the next 5 years. But Nirav, I'll come to you and ask you whether an NMDC, should he hold it for the next 5 years, or what should be his strategy?
See, very honestly, metals as a space is a high beta space. We have seen good amount of rally happening in most of the names over the last, I think, 3 to 4 years. Though we are quite positive on the entire space for next couple of years. But having said that, we need to check a lot of global parameters as well, and the domestic parameters. At this point in time, a 5 year view would be a little difficult to foresee. But from a 1 to 2 year time frame perspective, we are positive on the metal space. But having said that, we are a little cautious on NMDC because the valuations have slightly moved up. So from that perspective, I would not definitely recommend to buy at this point in time. But whatever amount you have, you can definitely hold on with a trailing stop loss and ride for next at least 3 to 4 quarters.
Positive stance that's coming in on NMDC. And with that, thank you so much, both of you, for taking your time out and helping our viewers with their stock specific questions today. And for our viewers, it's time for a short break, but post that, more on the markets coming up. Stay tuned.
Welcome back. You're tuned into Buy Now, Sell Now. We're getting you all the updates from the markets, and the banking stocks are in focus. 4 banks that are likely to remain in focus today, that are HDFC Bank, that has appointed Rajiv Kumar as the chairman and named Puneet Sharma as the CFO designate. We also have Axis Bank that will react to Sharma's resignation, while Bandhan Bank's CFO, Rajiv Mantri, has stepped down and is expected to join Axis Bank. Mithali is now joining us in with all the developments on these banking names.
Right, so we see that India's banking industry is actually playing a high-stakes game of executive musical chairs, with the CFO seat being the hottest one right now. So it starts with Axis Bank. The CFO, Puneet Sharma, he resigns after 6 years from the bank, but he's not leaving banking entirely. He's actually heading to HDFC Bank to take the position of CFO there. Now the domino falls and Bandhan Bank is up next, where CFO Rajiv Mantri resigns and moves straight to Axis Bank, replacing Puneet Sharma. Meanwhile, HDFC Bank's veteran CFO Srinivasan Vaidyanathan is set to retire in October, paving a way for Puneet Sharma to take the charge here. HDFC also adds heavyweight former Finance Secretary Rajiv Kumar to its board as additional independent director, as well as part-time chairman, subject to the RBI approval. But here's the twist. The chain actually began at RBL Bank. After its CFO existed last year, the bank appointed Bhavin Lakpatwala, who spent nearly 15 years at HDFC Bank and as its new CFO. So if you connect the dots, first it started with RBL Bank, moved to HDFC, then Axis, and then Bandhan Bank also announced their CFO resignation. So this isn't actually a few resignations. It is one of the biggest CFO reshuffles that India's private banks has ever seen in the years. In the banking, money is the only thing that we see right now. Sometimes the people managing it too, that is what being showcased by the private lending banks.
All right. Thank you so much, Mitali, for all that update. And let's do a quick market check also. Sectorial trends definitely are looking very mixed today with slightly negative bias. Nifty is very close to 24,000, but then we can see IT as being the biggest drag so far. The index falling almost 2%, and this also followed by auto and FMCG. That's what we can see. Banking indices are largely flat. Auto index, you can see it's almost 0.5% up, and Bank Nifty is almost flat at 57,769 right now. Definitely this indicates a limited directional cues for the Bank Nifty, and defensive sectors such as healthcare are steady, while realty, chemicals and mid-cap are there with modest gains. So that's the market so far. But with that, we'll wrap this edition of Buy Now, Sell Now. You stay tuned. Post-break, we'll get you market set notes.